Good morning. We have Mike and David on today's morning show with some exciting topics. I'm going to briefly hit a headline from Powell, moving some markets, maybe a little bit today, as well as I'm going to do a carryover from yesterday when I was challenged to think of companies that went out of business. A couple of them appeared on the Wall Street Journal today, and then I'm going to turn it over to David. We always talk about wealth management, and one of the most expensive things is a college education for your kids, grandkids, or yourself if you're listening. But before I get started, I must remind you this is a financial education presentation. You must do your own due diligence on anything that you hear. More disclaimer information can be found at ankerstarwealth.com, and the opinions expressed, including college rankings, are mine and David's alone. So let me start with a headline that is on my screen. Powell says the Fed has made quite a bit of progress on inflation, but needs more confidence before cutting. And when I hear this, I think to myself, when one of my kids says they cleaned their room and they've made quite a bit of progress, but they're not quite ready for me to inspect it. I sometimes wonder, is that really true? Is that really true? So obviously, all of us are invested in the stock market, and we pay attention very closely to what Jerome Powell says on inflation, on jobs, on really the cutting of the discount rate, where initially the year started with expectations of 5 or 6 cuts, and we're down to expectations of like 1, and most of them happening next year. So this is some of the information that helps them lead to that decision, and we'll be talking about more on this tomorrow night when we do our third quarter update. So continuation from yesterday, when Corey challenged me to think of companies that have went out of business, when we were talking about Nike and the shoe companies. And today when I opened the Wall Street Journal, I saw a couple of them, companies going bankrupt. So Redbox, I remember it seemed like it was just like 7 or 8 years ago, I would actually stand in line to get a disc from Redbox or to return one for myself and the kids. And yes, I have Netflix, and I had Netflix back then, but these were the newer releases. I wanted it like the same week or two it came out. And I drove by Redbox the other day that was at the CVS, and I saw there's nobody in line anymore. And I thought, I'm surprised that company is still in business. And there you go. Just today they come out. They're going Chapter 11 bankruptcy. We'll see if they can, find any money. But even then, the model itself seems out of date. I can't imagine. I think I do own one portable DVD player still, but we barely have a DVD player anymore. So surprised if this will continue. Another company I saw that went bankrupt or Chapter 11 is the toy company called Basic Fun, but they own Tinker Toys, which is something I kind of remember from a kid. I'm sure David does not. He probably remembers Care Bears. I'm just kidding,
Yeah,
David.
I do actually.
He does. I was going to say this company went Chapter 11, had Lincoln Logs and Tinker Toys. Remember when you were a little kid, you used to build these? If you remember that, then you're older like myself. Nowadays, I see kids on Roblox and Minecraft. So I do see electronic building. So at least the concept isn't gone. And as I scroll down here and I see some of these other toys, Care Bears, and they called it Misfittins toys. I've never heard of that before. Squishable Mash'ems. I guess these are more creative toys nowadays. I can see why they're going bankrupt. Most kids are pretty happy with phones, and I even see younger kids on iPads. Not sure that's healthy, but this company and they were major impact was their supply chain, which is Toys R Us. So if you remember, you used to get all your toys through Toys R Us. Nowadays I'm sure you can order things on Amazon or eBay or wherever, but still another company going out. So let me turn that over to, as those kids get older and they start giving up all these toys and they start getting closer to college, How do you afford that? Because we talk about inflation, and inflation certainly affected us in the last few years, but college inflation and the cost, it's been going a lot longer than a few years. So with that, I will turn over to David to talk about some cost-effective solutions.
All right, good morning, everyone. It's great to be back with you. So I taught high school for 9 years, hard to believe. And one of the things I always talk to my students is go to the school where you get the most money. Uh, that is the best advice I can give anybody when it comes to college searching, because if you go to that university, they're making an investment in you, as opposed to a university where if you're paying everything out of pocket, they don't care if you fell out after the first semester because they get your money. So you really want to try to go to a university where you can get the most money. And this kind of talks about private schools, which I never really considered. So, you know, the top 10 U.S. colleges that offer the best financial aid, none are public schools. And it kind of goes into this, and the nearly 90% of first time full-time undergraduate students at four-year colleges receive some type of financial aid. And this goes back to 2020, 2021. Um, and so what we want you to do is, maximize how much financial aid you can get. And then down here it talks about the average grant for private schools was over 25,000 versus the public schools, which was 6,600. So it's just something to consider. I had one student in my 9 years who actually took me up on that offer, and she said it was the best decision that they ever made. So don't get caught in the bias of, the piece of paper that they receive at the end from whatever university. Some of that stuff does pay off, but it's not worth the mountains of debt that they could potentially be under to start their adult life, and we certainly don't want that. And I did have a student one time turn down a very, very, very generous scholarship at a university to go to one where they didn't get one. And that I today, when I think about that, it still baffles me. So be, have your dream schools in mind where you want to go, because you may get money to go there, and it may be percentage wise something that you're like, okay, we can offset that, if you have 529 plan, or if you plan for, college savings and you're planning on spending some money. But really look for outside of the box thinking, where it's like, what are some the smaller schools around where, they're throwing financial aid at kids. And you get down here and you can kind of see, you know, kind of what we're looking at. So percent of first year students receiving financial aid, 50% at this university, Washington University in St. Louis. I'm sure there are some people who have heard this, but most of the people who are listening to us probably have not heard of this school, or Thomas Aquinas College, or Skidmore College. So these are places where outside of the box thinking can get you, if there's a location that you want to go, it could potentially get you close to that location where you can take some classes at the university that you wanted to go to, but still go to the smaller university and get that large financial aid. And especially for parents who have juniors that are transitioning to seniors right now, this is the time where they're doing all that stuff. And I always recommended having all of the senior college stuff done before senior year started, because senior year gets really busy. So, it's July 2nd, and school starts next month. So they still have 6 weeks to get through their applications, get through their essays, get all of that stuff starting to complete, so that when senior year gets here and they're doing all of the senior year stuff, they're not also drowning in all of this stuff as well. So just something to think about. Go where they give you the most money. Let them make an investment in you. So I thank you for your time.
Awesome, David. Thank you. Yes. When it comes to picking colleges, there's so many things. Do they have the best football program like Ohio State, where I went? That might be a decision in there, but don't get hung up too much on all that. I'm going to call it marketing, because the Alabamas and Ohio States and they tend to market with their football teams. But look at the total cost to go to that school. Also beware the highest price college giving you 20,000 off their $80,000 tuition for no reason. They're just trying to draw you in with a coupon. And
they
obviously,
they do a lot of marketing. I mean, even the school that I went to, Texas Tech, they have a lazy river that they really market, but it's like it's not warm enough to use when school is in session, so it's only really good for the people who are there in summer. So
oh my gosh. I was going to say Ohio State might have had some pools, but we didn't have a lazy river.
Well, they didn't have it when I was there. That came in after I left.
It's great. And obviously one thing, when you look at a college, make sure it has the program that you or your child believes they want to go in. I mean, if they want to go into virtual reality, molecular genetics, I mean, there's some top-notch waves of the future that are probably good things to go in. So, but college, definitely talk to your financial advisor as you help your child or grandchild plan for college. And I'll just throw in too, always make sure your kid has some skin in the game. I mean, it's nice if you can afford to pay for college for your kid, but sometimes they treat it as even more valuable if they got some money involved themselves, some skin in the game. I think that's very important. So with that, we will close out today, and we will talk to you all tomorrow. Thank you. Bye.
Bye.